The current live price of Strive Inc., trading under the ticker symbol ASST, is $15.53 as of 10:15 a.m. EDT on Wednesday, April 29, 2026. We are seeing a slight intraday dip of about 0.45% from the morning open, which might look like noise on a standard chart, but it actually signals a fascinating tug-of-war happening behind the scenes. While most retail investors are watching the broader market indices for clues, the real story here is the company's aggressive pivot toward a Bitcoin-centric treasury. Most people expect an asset management firm to play it safe with traditional hedges, but Strive just increased its holdings to over 14,500 Bitcoin. The reality is that Strive is no longer just a healthcare or asset management play. It has transformed into a high-octane proxy for digital assets, and the market is still trying to figure out how to value that kind of volatility. When you look at the recent trading volume, it's clear that the institutional appetite is shifting. We aren't seeing the massive sell-offs that usually follow a net loss report like the one they had recently. Instead, there's a steady accumulation happening. The expectation was that the Semler Scientific acquisition would drag down the balance sheet, but the reality is that Strive used that move to swallow up over 5,000 Bitcoin in one go. If you're using tools like the Fidelity mobile app or checking your Robinhood investments, you've probably noticed the stock has been range-bound between $15 and $17 for the last few weeks. This consolidation usually happens before a major breakout or breakdown, and with the Bitcoin for Business Summit they just announced for May, the company is clearly trying to lead the narrative rather than just follow the price of tokens. If you're doing online investing through an individual brokerage account, you have to ask yourself if you're comfortable with a company that views Bitcoin as its primary hurdle rate for success. Unlike a traditional intelligent portfolio that balances risk across sectors, Strive is leaning into a singular conviction. This isn't your standard Fidelity mutual funds approach. They are actively retiring debt, like the $20 million they just cleared with Coinbase Credit, to ensure their balance sheet is as lean as possible while holding on to those digital assets. The market's expectation is that a company with a GAAP net loss of nearly $400 million should be in a tailspin, but the reality is that 95% of that loss was just a non-cash mark-to-market adjustment on their crypto holdings. For the smart investor, that's a massive distinction. The volume we're seeing today on the Interactive Brokers platform suggests that traders are positioning themselves ahead of the next monthly update. We've seen about 120,000 shares move in the first hour of trading, which is slightly above the 30-day average. This indicates that someone is either defending the $15 support level or accumulating quietly. When you compare this to the movement in Tesla stock or Nvidia stock, which often move on broader AI or EV sentiment, Strive is dancing to a very different drumbeat. It's becoming a favorite for those who use self-investing strategies to find asymmetrical bets that aren't yet fully understood by the mainstream analysts at Fidelity Wealth Management. Let's talk about the healthcare side of the house for a second, because this is where the expectation versus reality gap is widest. People see the Clinovanta subsidiary and think medical tech, but the reality is that Strive is looking to monetize that business to buy even more Bitcoin. They brought in Michelle Fox from Kelaflex to lead that charge, not necessarily to build a 20-year healthcare dynasty, but to maximize the value of the preventative healthcare assets they acquired. This is a classic sum of the parts play. If you're looking for investment help or scanning investing sites, you'll rarely see this mentioned because the crypto story overshadows everything else. But the cash flow from the asset management side, which now oversees more than $2.7 billion in client assets, provides a safety net that most pure-play crypto firms simply don't have. For those using Robinhood stock trading or the SoFi trading platform, the appeal here is the Bitcoin per share metric. Strive is one of the few companies explicitly stating that their goal isn't just revenue growth in dollars, but increasing the amount of Bitcoin each share of ASST represents. It's a bold, almost defiant strategy in a world of Fidelity ETFs and standardized Schwab intelligent portfolios. It challenges the very idea of what a public company should be. Critics say it's too risky, but the reality is that their preferred stock, SATA, is yielding 13%, which is attracting a completely different class of income-seeking investors who are essentially getting paid to wait for the next crypto bull run. I want to hear from you guys in the trenches. Comment below how many shares of Strive Inc. you currently hold, or if you're staying away because of the Bitcoin exposure. It's one of those stocks that really divides the room, and I'm curious to see where you all stand on this treasury strategy. Looking back at the older reports, Strive's public listing in late 2025 was met with a lot of skepticism. They had a massive GAAP loss right out of the gate, which scared off the safe investors who prefer Fidelity IRAs or long-term Fidelity brokerage holdings. But if you look at the Q1 2026 data, their Bitcoin yield was actually quite high at nearly 14%. The business model is essentially a hybrid, a steady, fee-generating asset management business on top, with a massive high-beta digital asset vault underneath. They are using the cash from the asset management fees to pay down the debt they took on to buy the Bitcoin. It's a self-reinforcing cycle as long as the market for digital assets stays healthy. The institutional activity is the real tell here. We've seen some activity from smaller hedge funds that specialize in event-driven trades. They aren't buying because they love the healthcare business. They're buying because Strive is trading at a significant discount to its net asset value when you factor in the Bitcoin and the cash on hand. If you're using SoFi Active Investing or Interactive Brokers trading, you can see that the bid-ask spread has been tightening, which often precedes a volatility spike. The market expects a slow, boring asset manager, but the reality is a lean, aggressive capital allocation machine. As we look toward the future, the catalysts are clear. The Bitcoin for Business Summit in May is a major one.
If Strive can convince other CFOs to adopt even a fraction of their treasury strategy, they become the consultants and the standard bearers for a new type of corporate finance. The risk, of course, is a sustained downturn in the crypto market that could force them to liquidate assets at a loss. But with $90 million in cash and cash equivalents as of late April, they have a significant buffer before they'd ever be forced into that position. They've even managed to attract interest from those who typically only look at Apple stock for stability, simply because the yield on their preferred shares is so high compared to anything in the tech sector. Whether you're using a SoFi robo-advisor or managing your own Robinhood crypto wallet, Strive represents a bridge between two worlds. The expectation is that this bridge might be flimsy, but the reality of their balance sheet, anchored by tangible digital assets and a solid fee-based revenue stream, suggests otherwise. They are playing a different game than the ones you find in your typical Fidelity ETFs. They aren't trying to track an index, they're trying to outperform the dollar itself. In summary, the story of Strive Inc. is one of calculated defiance. Investors expected a standard asset management firm, but were given a crypto treasury powerhouse. We see the intraday price at $15.53 reflecting a quiet period of consolidation, but the underlying institutional accumulation and the aggressive retirement of debt tell a more bullish story. The reality of their 14,500 Bitcoin holdings far outweighs the noise of a quarterly GAAP loss. They've moved past being a simple healthcare to crypto pivot, and are now positioning themselves as the educators and leaders of the corporate Bitcoin movement. As we move into the middle of 2026, the contrast between what the market thinks Strive is and what the company is actually becoming will likely be the primary driver of its valuation. Keep a close eye on the volume and those Bitcoin yield metrics, because that's where the real alpha is hidden.